Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we're tracking for you. On the fourth headline today, metal stocks shown in trade after producers hiked prices and global inventory levels hit a low. The sector majors like SAIL, Hindalco and Tata Steel all clocked gains on the news, with analyst commentary on the space pushing stocks higher. Nimesh joins in with more details on that. Nimesh, over to you.
Hi Sonia, so the entire metal pack is buzzing in trade on the back of the first upgrade for 2023, which is on the metal stock. So Jefferies has upgraded both Tata Steel and Hindalco to buy from hold, and they've raised the target price as well. Jefferies has been cautious on the sector for the last 1 year now, and now at these valuations they've turned positive, and they've raised the target price on Tata Steel to 150 from 95 earlier, and on Hindalco the target price is now raised to 600 versus 390 earlier. Now the key reason for the upgrade is they believe that China has started to ease COVID policies, and they're going to support the ailing property sector, both positive for the Indian steel companies. In terms of numbers, they believe the worst in terms of quarterly margins for the quarter for the Indian steel companies, and in terms of earnings cut for both Tata Steel and Hindalco are both behind. So the worst is in the price, and from here on things are going to improve. In fact, Tata Steel is a preferred bet for them in the metal names, largely on back of attractive valuations plus improving asset footprint and balance sheets. On back of that, a big upgrade in Tata Steel, but they've also upgraded Hindalco to a buy with a target price now to 600 from 390 earlier.
Okay, thanks a lot, Nimesh, for that. Well, the fifth headline today, moving on to the stocks making all the big news. MCX was down 6% after delayed cost reduction plans by extending its IT contract with 63 Moons, while Relige Enterprises gained in trade to close flat after reporting a debt settlement agreement with its lenders. Surbhi is standing by with more on these two. Surbhi, over to you.
Thanks for that. So Relige is gaining traction in today's trading session, but that's because the lenders have approved one-time settlement for outstanding dues for Relige Finvest. Now Relige Finvest is the NBFC arm of the company. Finvest owes close to 5,344 crores to 16 lenders, including the likes of SBI, Bank of Baroda and Punjab National Bank, and the company has proposed 2,320 crores as one-time settlement, which is close to 57% haircut to the outstanding dues. The management in its press release also said that they've been taking all the corrective measures suggested by the RBI so they can restart their lending business. The management was on our channel earlier, and they've said that 88 to 85% of these dues have already been paid, and the remaining will be paid by end of January. Also, MCX is in focus today. That is because over the weekend that they've announced that it extends its service contract with 63 Moon Technologies for another 6 months. They were supposed to switch to TCS as a service provider, which in turn would reduce their operating costs. Now, Morgan Stanley has written on MCX with a target price of 1220, which is a downside of close to 20%. They think that the switch to TCS will now not happen until Q2 of FY24, which will increase the cost estimates in the short term. They are valuing MCX at 28 times FY24 PE, whereas currently it is trading at 41 times PE. Also, ICICI Securities have downgraded the stock to an add from a buy rating with a revised target price of 1669 versus an earlier target price of 1795. They say that the new extensions of 6 months is longer than the earlier estimated of 3 months, and that's why they expect the Q3 FY23 EBITDA to be lower by 10% on a sequential basis due to higher software expenses. They value the company at 31 times FY24 PE.
All right, we also caught up with Rashmi Saluja, the executive chairperson of Relige Enterprises, who said that the company is planning on paying the remaining dues by the end of January, and added that the entire haircut amount is not more than 25%. Take a look.
Already paid almost from 80 to 85% dues have already been paid. In fact, we signed the entire agreement with the lenders. 16 lenders we signed on 30th and 31st. Before the end of the day, we paid the lenders almost 85%. So that we have already done. And the remaining also, though we get time, 90 days as per the RBI guidelines, we get 90 days to fulfill the entire settlement. But we are going to complete it in January so that we can really focus on the lending part. When you are actually paying the money upfront, it is a big, source and bonus, and for banks as well. And if you calculate the entire haircut, it is not more than 20-25%.
Meanwhile, state-run mining majors NMDC and MOIL rallied on price hikes. NMDC has raised product prices by 5,000 rupees a ton. Nigel is here with more on both these stocks. Nigel.
Well, that's right. NMDC has gone ahead and increased their prices effective January 1st. And on lumps, they've reported that they've increased it by 200 rupees per ton. However, I understand that in various parts of the country, well, it's a little bit higher as well. In some parts of the country, lump prices are high by close to around 500 rupees per ton. For fines, well, they have reported that it's up by close to around 500 rupees per ton. What are the factors that are playing out? Well, China has been reopening. So that's why, in fact, you've seen that global iron ore prices are up by close to around 15% in the past 1 month or so. There have been price hikes that have been implemented by Odisha miners, on iron ore. So it gives them reason to go ahead and increase prices. And also pellet prices, well, that has moved higher big time. So that gives further reason for them to go ahead and increase iron ore prices as well. They've also updated on their sales numbers for the month of December, and that's come in a little bit lower by close to around 2% on a year-on-year basis. The other one is MOIL. They as well have two pieces of news coming in there. One is they've increased prices on manganese ore with manganese content of around 44% and higher. That's been increased by around 15%, while with manganese content of less than 44%, it's increased by around 7.5%. Besides that, the December production numbers are very, very good. It's the best ever that they have stated. They've also stated that, in fact, the production number is up by close to 18% in comparison to November, and up by close to 91%, in comparison to November. That's the production and the sales numbers. Put all that together, NMDC and MOIL, both of them did well.
All right, on to a CNBC-TV18 exclusive. The Ministry of Corporate Affairs has granted permission for the demerger of the Shipping Corporation of India. Timsi Jaipuria is here with more on this. Timsi, over to you.
Well, 29 December was the day when Ministry of Corporate Affairs held a meeting to see the proposal of demerger of core and non-core assets of Shipping Corporation of India. Remember, that was a sticking point when it comes to the divestment plans of Shipping Corporation of India. And Ministry of Corporate Affairs, what sources are indicating to us, have granted the permission in principally formal orders expected in next 5 to 10 days. This demerger of core and non-core assets will actually pave way for divestment plans of Shipping Corporation of India. Remember, government plans to divest over 63% of its stake in Shipping Corporation of India. And most crucially, this division of core and non-core assets was something that was actually keeping the plans on hold. And now, once the formal orders have get received by Shipping Corporation of India and DIPAM, the proposal can move forward. So another 5 to 10 days is when the formal or written orders will be given by Ministry of Corporate Affairs. That's what sources are indicating. So let's see how soon the formal orders come in and how soon government then begins the plan for divestment. Back to you.
Okay, thanks a lot for that. Well, it was the first trading session of 2023 today, and brokerages have revealed their top stock picks for the year. Vivek is standing by to give us more on that. Vivek.
Thank you so much. So, brokerages, their top picks, their model portfolios, their changes as well as weight increases and decreases. We'll analyze all that, as we step into the fresh year. Now, first up, Jefferies, the main theme for 2023, according to them, is the revival of the domestic economy as well as private capex coming back. The top picks, especially when you're talking about the entire space, is the fact that within the financials, within the banking pack, they like ICICI Bank as well as SBI. Moving on, they actually continue to like, in the property market, they like Godrej Properties as well as DLF. When you're moving on to the auto pack, they like Maruti, they like Tata Motors as well as TVS Motors. Within the space, the FMCG space, they like HUL, GCPL as well as Britannia. And when you're talking about the industrial space, the names that they like are Tata Steel, L&T as well as Container Corporation. On the other hand, some of the sectors that at this point of time they are a little underweight on is IT services, telecom as well as healthcare. Moving on to the mid-cap space, the top picks for Jefferies in the mid-cap space is Thermax, CMS Info, Prestige Estates, Avasfin, as well as Supreme Petro. And when you're talking about some of the other picks that they like, Embassy, Kajaria, Indian Hotels, Dalmia Bharat, as well as Syngene are some of the other top picks in the mid-cap space. Moving on to brokerage house IIFL, the large-cap picks that they have, Bharti Airtel, interesting name, SBI Life, NTPC, Bank of Baroda, Interglobe are their top picks. Within the mid-cap space, they like APL Apollo Tubes, Cummins, Apollo Tyres, as well as JB Chemicals. On the other hand, when you're moving on to the small cap space, they like ICRA, they like KIMS, Deepak Fertilizers, Parmec, as well as Equitas SFB. that has seen a bit of a re-rating in recent times. Their top sells, however, are Shree Cement, IRCTC, Aarti Industries, Divi Slabs, as well as Wipro. Now, moving on to what Macquarie likes for 2023, it's the top names that they like, with an interesting name, Gale, that they have, as well as TVS Motors. On the other hand, some of the underperform ideas that Macquarie has include names like Bajaj Finance, Jubilant Food Container Corporation, Reliance, as well as Industries. Lastly, we are seeing what Kotak has to say. Kotak, in fact, adds SRF to their model portfolio with a weightage of almost 150 basis points. And these are the stocks where they're trimming a little bit of stake to give that weightage to SRF.
Okay, well, let's move on. Thanks a lot, Vivek, for that. In the pharma space, Piramal Pharma is the next stock on our radar, surging in trade today. Ekta is here to tell us why there was an up move in that stock. Ekta, over to you.
Thanks for that. Well, yes, Piramal Pharma is in focus because the government has initiated an anti-dumping investigation on vitamin A palmitate. So basically, this is an originating in terms of the exports from China, EU, Switzerland. Now, Piramal Pharma stands to benefit because the company is the sole producer of vitamin A in India. We do understand that the company imports the raw vitamin A, processes it, and sells it to food as well as consumer companies in India. Now, what has been taking place is that there has been a dumping of the final product of vitamin A in the country, and that was coming in at cheaper prices. So if in case this investigation is successful in putting any kind of anti-dumping duty, it would be positive for Piramal Pharma.
Okay, Ekta, thanks a lot for that. With that, it is curtains down on this edition of Markets Today. Have a great day and thanks a lot for watching.